long. Due to some technical issues, we were having some problem. So, good afternoon, and respected IQAC coordinator Pushmita Sen Gupta, my dear faculty members, and my dear students. Today, I'm delighted to welcome you all to today's session, and it's a pleasure to have you all with us today. So, this particular webinar is being organized as part of the activities planned by the Institution Innovation Council in line with the Quarter 3 initiatives entrusted by the Ministry of Education. So, this very endeavor, it reflects a continued effort to encourage innovation, awareness, and holistic learning among the students. As we move forward in today's session, we will be focusing on aspects of entrepreneurship that is often overlooked but which is absolutely essential. And these are the legal and ethical values that shape a startup's journey. So, our entire focus of this session will be on the ethical and legal steps in that is indulged in these startups. So beyond innovation and growth, these principles also play a very important role in building credibility, ensuring sustainability, and making responsible decisions in the business world. So, and for today's session, we are privileged to have with us as a speaker our very own Professor Binod Kumar Shah from the Department of Commerce. Sir will be sharing his valuable insights that I'm sure we will all benefit from. So, Binod sir, over to you.
No, no, no. Before starting, Binod sir, 1 minute, just 1 minute. Regarding our today's program, I would like to request our Pushpita madam, Dr. Pushpita
No,
Sengupta ma'am.
it's okay because there is we are running late. So it's
Okay.
better to start with Vinod because I am always there and for the to maintain the quality, and Diksha is also part of the IQAC team. Polashi is doing the recording part, so it's better to be start. And I hope the students who are present today are benefited because right now the entrepreneurship development and the legal aspect and the ethical part is very much looking part of any entrepreneurial development. So I request Vinod and to start his presentation. Thank you, Amit and Diksha, for organizing such a webinar, which is very much beneficial for the students. Thank you.
Thank you, ma'am.
Okay, now Binod, you can start. I'm going to share your PPT into this screen. Okay, let's start. And whenever I need to change the slide, you please tell me. Binod, will change it. Okay, wait.
Respected esteemed faculty members and dear students, good afternoon to everyone. I am truly honored to present a special lecture on legal and ethical steps for startups, being organized by Institution Innovation Council of our college, Puras Kanpur Haridasri Mahavidyalaya. I want to express my gratitude to all the members of the organizing committee for this opportunity. Before we dive into various legal and ethical topics, let us first understand what a startup is. Startup India is a key initiative by the Government of India aimed at promoting startup culture and creating a robust and inclusive environment for innovation and entrepreneurship in the country.
Acha, Binod sir, 1 minute. Just for very sorry for interrupting. This screen is it show? Is it visible?
Yes, I'm getting the screen.
Okay. Thank you.
Shall I continue?
Yes. You please.
A startup is basically a new and creative innovative business ideas to develop a unique product or service with the goal of rapid growth and scalability, often challenging existing markets. Unlike traditional small business, startups face high uncertainty, depend on external funding such as venture capital, and focus on addressing a complex problem, typically through the technology. So I encourage all my dear students to engage actively and ask questions and take full advantage of this session in near future to come. The key highlights of the session is: number one, we have to understand what is startup. Next, briefly introduce the Startup India schemes, startup planning, and then the main topic for the today's session: legal steps and ethical considerations. Next. Startup. A startup is a new, innovative enterprise aimed at developing a unique product or service for rapid growth and scalability. Founded by entrepreneurs to address market needs, this business operates in certain uncertain environments and rely on external funding, like angel investors and venture capital, to establish this business model. Angel investors are basically wealthy individuals or institutions who provide capital to startup in the early stage, and exchange of equity ownership.
আচ্ছা বিনোদ, এই অমিতের মাইকটা একটুখানি অফ করতে হবে।
Yes, ma'am. Just 1 minute.
ঠিক আছে, তাহলে তো ওখানে একটা নয়েজ আসছে। ঠিক আছে বিনোদ, প্লিজ কন্টিনিউ।
আমি কন্টিনিউ করব?
হ্যাঁ, প্লিজ প্লিজ।
Okay. Startup have key characteristics. There are 3 characteristics of each and every startup. First one is innovation. Startups are often characterized by innovations, whether in technology, product, service, market sphere, or anything that is new in existence. Scalability. Whatever we will start a new enterprise, it must have potential to grow rapidly and will capture large market with a short span of time. Each and every startup. Number 3, there is a huge amount of risk and uncertainty. High level of risk and uncertainty is compared as compared to established businesses. Next. Now we have some brief introduction about the Startup India schemes. Startup India is a major initiative launched by Government of India on January 16, 2016, with the goal of encouraging innovation, boosting economic growth, and supporting entrepreneurship. It is run by the Department of Promotion of Industry and Internal Trade, shortly DPIIT. It seeks to change India into a nation of job creator, rather job seeker, by providing tax incentive, simplified compliance, and financial assistance. Next. Indian startup scheme has certain features. Number 1 is simplified regulatory compliance. Simplified regulatory compliance for a startup involves self-certification under various labor laws and environmental laws. Not only that, exempting a startup from the inspection for 5 years. Next one, funding and financial incentive. The startup can access funding and financial incentives in India through government initiatives. Government has made or created about 1,000 crore startup India Seed Fund for early stage promotion of startup, and as well as Seed B fund of funds. Not only that, a new startup can avail fund from angel investors and venture capital also. Next one, tax exemption. Tax exemption under India's startup initiative. DPIIT recognized startups can receive 100% income tax exemption on profit for 3 consecutive financial years within their first 10 years of incorporation, as per Section 80 IAC of Income Tax Act 1961. Intellectual property right protection. Here key protections types include patent for new inventions, trademark for brand identity, copyrights for creative work and software, and trade secret for important confidential informations of business. Support and networking ecosystem. Collaborative interconnected networks for entrepreneurs that will include investors, mentors, incubators, government bodies that will foster innovation and growth. Public procurement norms. For each and every startup, the government has exempted certain public procurement norms like no prior experience, no no fixed turnover, and free of earned money deposit or tender money. Next. Next step is startup planning. There are certain steps that are required to be followed before a startup. Startup planning is all about detailed process of outlining, organizing, and what's the needed to kick off, run, and grow a fast expanding business. It serves as a guide that transforms business concept into a proven and operational entity, usually requiring a pinpoint of scalable business model and target audience and financial needs. Next. Here are the key steps. Number one is idea generation and validation. For startup, it is a disciplined process of identifying real world problem and testing the proposed solution with actual users before investing money into the startup. Next one is market survey or research. Market survey or research is actually systematic process of gathering, analyzing, and interpreting information about potential customers, competitors, and industries trends to validate a business idea and reduce risk. Next, business plan. Developing a business plan. Business plan is a strategic written roadmap detailing company's goal and operational methods, market analysis, and financial projections. Next one, minimum viable product. That is the most important. Whenever we start a startup, product or service is to be think out. A minimum viable product is initial version of a product that includes only its essential features, allowing to meet the needs of early user and consumers. Securing fund I've already discussed. The government has also supported, and angel investors and venture capitalist is there also. Assemble a team. Assemble a team is intentionally selecting, recruiting, and aligning individuals with complementary skill to execute a business vision and plan. And finally, launch and iterate to release a minimum viable product quickly to real users, then continuously improving it based on feedback rather than waiting for perfections. Next. Now, we have a main topic for today's discussion is legal steps. Whenever we are making a startup, there are certain legal formalities that are required to be followed and abide by. The first step is choosing right legal entity. Choosing a right legal entity. The first step is starting a startup with choosing the right legal entity. In India, common options include, first of one is sole proprietorship business. The very simple form of business enterprise or business structure where there is a minimum amount of capital is needed. No such a legal formalities. Only getting a trade license, we can start a sole proprietorship business. But the problem is that in a sole proprietorship business, the liability of proprietor is unlimited. Next one is partnership business. Partnership business, it is mainly governed by Indian Partnership Act. The minimum number of owner in this partnership business is 2 and the maximum is 50. In partnership business, there is no problem of capital because capital contributed by 2 or more partners there. But the problem is again of unlimited liability. Unlimited liability is basically and a liability of partnership business is structured where partners are personally liable for all debt and obligations of the firm. If the business assets are insufficient to cover the liabilities, partners' personal property will also liable. Next form of enterprise is private limited companies. It is governed by Companies Act 2013. Here, the main advantage of a private company is that it is free from unlimited liability because liability is limited there, but it has certain legal foundation that are required to be abide by. Because before starting a private limited company, we have to maintain various documents, legal documents that we'll discuss later on. Limited liability partnership. Limited liability partnership is basically like partnership. The basic difference is that in partnership business, the liability is unlimited, but here the liability is limited to the investment. And the final is one-person company. One-person company refers to a legal business structure in India, allowing a single owner to operate within limited liability and separate legal entity. It is basically designed for solo entrepreneurs, where there is only one member, one director, and mandatory nominee director also. Next. Now, we have already discussed about the business structures or business entity that can be any one of them can be started, but there are certain legal or foundational documents for the startup incorporations. The documents relevant for a startup incorporation include, first of all, identity and address proof. For that, PAN and Aadhaar details is required to be furnished. Next, the bank details is required to be furnished, especially bank current account details. Bank current account details. Next, business plan and feasibility report. Business plan and feasibility reports includes all the details of the business regarding capital, regarding business operations, and everything. Next, founder and co-founder agreement. If the business is started by a particular person or individual, and along with the individual, maybe some partnership business in there where there are more than 2 or 3 individuals, the agreement is required to be made between them. Partnership deed. Partnership is very much important for partnership firm or a LLP. Partnership deed is basically an agreement among the partners regarding all the details of business affairs. Memorandum of association. Memorandum of association and articles of association. These two are prime documents when a limited company is started. Memorandum of association. Memorandum of association is a vital document for a company, acting as a rule book. It clarifies why a company exists and outlines its power and limits. It is similar to a guide that covers all the laws and rules of companies that must be followed when dealing with outside. Articles of association and bylaws. Articles of association is a legally binding foundational document that governs company's internal management. Memorandum of association is a document that maintain relationship between a company and the outside world, but articles of association is an internal management document, operations and regulations. It defines the rights and responsibility of directors and shareholders. Next, shareholder agreement. Shareholder agreement is a private, legally binding contracts among the company's shareholders that defines their rights, obligations, and relationship. The main aim is to protect their investment and prevent disputes. Another important document is non-disclosure agreement. Non-disclosure agreement is also a legally document that bind the contract that establish confidential relationship between parties to protect sensitive informations from being disclosed. Next, NOC, non-disclosure agreement. Next, lease or rental agreement. If the particular startup is being carried on a rental property, then lease or rental agreement is to be made with the owner of the property. Next, DPIIT recognition. If a startup is recognized by DPIIT, then a recognition document should be provided. No objection certificate. No objection certificate for a startup also a legal document from a property owner allowing the business to use their premises as a registered address, and crucial for company incorporation, GST registration, and bank account details. Digital signature certificate, DSC. A digital signature certificate is a secure, electronic, legal valid document that authenticates an individual or organization identity in digital world. It is basically required for a limited company. Director identification number, it is also required in case of a private company. It is given by Ministry of Corporate Affairs of India. It is given for each and every director of the company. So these are the documents that are required to be provided when a startup incorporation is done. Next. Next one is license and permits. License and permits. When a business is started, the license is very much important. The first license is local trade license, which can easily be obtained from a local authority or municipality or Gram Panchayat, or sometimes from Cantonment Board also. Shop and Establishment Act license. It is mandatory for state level registration. It validates legal registration of a business. It is required for a retail business. It actually provides the details of employees, working hours of business. Sometimes it is also called as shop license. FSSI, license for food business. If a startup is about food industries or food manufacturing, then FSSI license is required to be obtained. Import-export code for foreign trade related startups. If a startup is engaged in export and import, then export-import code or license is to be obtained. Drug license is mandatory for pharmaceutical or medical entrepreneurship. Udyog Aadhaar. Udyog Aadhaar is actually like a Aadhaar card, but it is for an enterprise or industry. It acts as a government registration proof, offering benefits like we can easily take loan from this Aadhaar, subsidies from government, and allowing MSME to join the regulations. Next. Taxation compliance. Complying with tax regulation is also critical for legal compliance of startups. It is essential to understand and fulfill tax obligations. It may include, first of all, PAN is very, very important for every business. If the business engages employees and provide them salary, so for deduction of from salary, PAN is also important. Next, GST registration. GST registration. In India, GST registration is mandatory if a startup or a business engaged in supplying of goods and the threshold limit for supplying goods if exceeds rupees 40 lakhs, then GST registration is mandatory. If any enterprise engaged in providing services, then the threshold limit for GST registration is rupees 20 lakhs. Professional tax registrations is also mandatory for state level compliance in India for business with a maximum time liability of 2,500 per annum. Employers must register within 30 days of hiring a certificate. Income tax regulation, the startup has to follow various income tax rules and regulations from time to time. Besides that, tax regulation of excise duty and custom is also to be fulfilled. Next. Labor laws compliance. Complying with labor laws is also vital for startups to maintain a healthy and productive work environment and avoid legal disputes. The following should be considered: employee contract and offer letters. Workers classification. Worker can be classified into 3 or 4 categories: skilled workers, semi-skilled workers, unskilled workers, and professional workers. Working hours and conditions should be provided as per Factory Act 1948. 48 hours per week working hours and 9 hours per day. Minimum wages and benefits. The worker is to be provided minimum wages and benefits. Healthy and safety. The workers should be provided good working conditions and environment to provide them safety. Prevention of sexual harassment for the workers. Grievance redressal is also there if for registering the complaint of employees and provide them suitable redressal from time to time. ESI and PF registration. Each and every workers is required to get medical benefits and also retirement benefit. For that, ESI and PF to be registered. Record keeping is always maintained for each and every workers. Non-compete agreement. Non-compete agreement is a contract where employee or partner agrees not to enter into start a similar profession or trade in competition against the current employer. Next. Amit.
Yes, sir.
2 minute break niche.
Huh?
Break of 2 minutes. Huh?
Okay.
Shall I start? The next step is intellectual property protection compliance. Intellectual property protection is crucial for a startup to safeguard their unique ideas, inventions, innovations, and brand identity, as well as confidential informations. It can include trademark registration, patent registration, copyright registration, and trade secret for non-disclosure agreements. Next. Contextual obligations and compliance. Effective contract management is vital for startups to ensure smooth operations and minimize legal risk. Here are some key considerations. Clear and comprehensive contract to be made. Each and every contract must have legal enforceability, legal drafting and management, and above all, documentation and report keeping is to be maintained. Next. Business operation compliance. Business permit requires specific contractual relations and procedural compliance to legal and service requirements. These legal papers describe the conditions of the deals with franchisees, vendors, customers, and service providers in order to have a clear vision of business operations and liabilities. It can include franchisee agreement, vendor supplier agreement, service level agreement, privacy policy, and terms and services. Next. Environment compliance and environment laws. It is very much important. Environment regulations are gaining prominence day by day, and a startup must consider their environmental impact. Obtain necessary clearance from relevant environment authorities if the business has an environmental impact. Environmental regulations include controlling air and water pollution, waste management, energy and water conservations, consent to establish and consent to operate from state pollution control board from time to time. Next. Invest and financing compliance. Startup in India have to access diverse range of funding options, including both public and private sources. Public funds include government schemes like Startup India Seed Fund Scheme, Pradhan Mantri Mudra Yojana, etc. Private funding options encompass various schemes like from venture capital, angel investors, crowdfunding, bootstrapping. So for this, investment and financing compliance is required, and a document and various document is required to be maintained, like term sheet, capital contribution sheet, shareholders agreement, shareholder subscription agreement, investment agreement, debenture agreement, or convertible notes. Next. Insurance compliance is also important because a startup has to consider various insurance policies. For a startup in India, insurance compliance involves navigating both mandatory and recommended insurance policies like employee state insurance, employee compensation insurance, general liability insurance, professional liability insurance, cyber insurance, property insurance, product liability insurance. These are required to mitigate risk and ensure smooth operation of business. Next. Accounting and reporting also important. Accounting and reporting is important for each and every startups in India are driving force for innovations and economic growth. While they focus on their business activities, it is crucial to understand and comply with various accounting regulations set by accounting bodies like applicative accounting standard, compliance with the Companies Act in case of limited companies, preparation of financial accounts and statements, annual audit requirements, filing of tax returns, TDS, tax compliances, investment valuations, compliance with various accounting softwares like TallyPrime, disclosure requirement, regulatory changes and update from time to time, and seek professional guidance from chartered accountants, cost accountant, company secretary, etc. from time to time. Next. Data privacy and protection compliance. It is also important because most of the times the startup uses personal data from the public. Startup India need to comply with Digital Personal Data Protection Act 2023, which outlines how personal data should be collected and processed and stored. It includes obtaining valid consent from the public, implementing security safeguards, data principal rights, such as the right to access, correct, and erase data. Next. Due diligence and corporate governance compliance. Due diligence and corporate governance compliance are crucial for a startup, especially when seeking funding or partnerships. Due diligence for startups, financial due diligence, legal due diligence, operational due diligence, shareholders agreements, and corporate governance for startups, board of directors, ensuring a diverse and independent board with clear roles and responsibilities, internal controls, transparency and disclosure, providing timely and accurate information to the stakeholders. Next. Now, there are some ethical considerations for each and every startups. Indian startups encounter considerable ethical dilemmas as they navigate through rapid expansion, fierce competition, and complicated regulatory environment. These dilemmas frequently arise from mentality to growth at all cost, which can result compromises regarding transparency, employee well-being, and consumer confidence. Next. Growth at any cost and corporate misgovernance. The intense pressure of venture capitalists to achieve swift growth has resulted in instances of misgovernance, including inflated valuations and questionable tactics to enhance performance metrics. Next. Data privacy and security has already been discussed. As India embraces digital informations, so data transparency should be maintained and clear consent from the public should be taken. Next. Workplace ethics and employees' welfare. High pressure environment often lead to burnout, unrealistic sales expectation, and toxic workplace cultures. Startup also grapple with issues like fair treatment of workers, timely salary payment, fostering inclusive environment free from harassment. Next. Misleading marketing and advertising. Certain startups resort to misleading claims and exploit religious and patriotic sentiments inappropriately to draw in customers. Sustainability and environmental impact. It has already been discussed in legal steps. There are increasing pressure to adapt environment, social, and government's ESG practices. Ethical conflicts arise when sustainable options such as avoiding plastic packaging clash with startup need of rapid scaling. Next. Anti-competitive practices. Larger companies and dominant platforms are under scrutiny for pricing and unfair contractual agreements that can marginalize smaller competitors and sellers. Next, bribery and systematic issues. Founders frequently report dealing with corrupt ecosystems where bribery of government officials, mediocre bureaucracy pose daily ethical dilemmas. Next, here is a list of relevant acts for each and every startup that is required to be abided by the entrepreneur. Next. Important website for startups has been given here. That is very useful for the startup. That's all.
Thank you so much, sir, for your highly insightful and engaging presentation. Your presentation was very much well structured and consolidated, and I'm sure that all of us who have participated in this webinar today have something to take back with them. So, as we have approached towards the end of this session, I would like to invite the convener of Institution Innovation Council, Professor Amit Boler, to deliver the vote of thanks and officially conclude this session.
Thank you very much, Diksha ma'am. I feel really greatly honored to propose the vote of thanks on this special webinar. So, on behalf of the institution's Innovation Council of Pulash Kanpur Haridas Nandi Mahavidyalaya, I express our sincere gratitude to our respected today's resource person, Professor Vinod Kumar Shaw, for delivering such an insightful and enriching lecture on startup, legal, and ethical steps. Your valuable guidance has truly enlightened us and will be highly beneficial for all the participants. I would like to humbly and sincerely express my deepest gratitude to our respected Principal Sir and also Chief Patron, Dr. Tapos Kumar Samanto, and our esteemed IQAC Coordinator, Patron, Dr. Pushpita Sengupta, ma'am, for their constant guidance, kind support, and encouragement, without which this program would not have been possible. I would also like to thank all the respected teachers and members of the organizing committee for their efforts and coordination in successful arranging this webinar. A special note for appreciation goes to all participants and our dear students for joining us and making this session meaningful and interactive. With this, I conclude the session. Thank you all once again for your presence and cooperation. Thank you. Now I'm going to share our attendance link into the in-call message. So I'm requesting to all of you, please give your attendance for this today's session. Thank you. Just give me 1 minute.